This is the IRS Problem Solver Podcast. I'm David J. Griggs, CPA. If you've got tax debt, payroll tax issues, or the IRS is coming after you, you're not alone. Each week I share real strategies to stop collections, protect your business, and take control of your tax problems legally and effectively. Let's dive in. So today we're going to be talking about something that keeps a lot of business owners up at night: payroll taxes. Now, before you tune out thinking, it's just bookkeeping stuff, let me stop you. Payroll taxes are one of the fastest ways for the IRS to shut your doors. If you don't get this right, it's not just penalties, it's your business, your vendors, even your personal assets on the line. So for the next 10 or so minutes, I'm going to break down why payroll tax problems happen to good businesses, what the IRS can do if you fall behind, and the first steps you can take to protect yourself. So, why do businesses fall behind? You'd be surprised how many business owners I talk to who never really meant to fall behind. Most of the time, it's not greed, it's cash flow management gone wrong. Here's the pattern: you've got payroll tax coming up, employees dependent on you, and a client who hasn't paid their invoice yet. The choice becomes, do I pay my people today and catch up on payroll taxes later? Most people pick the people. That makes sense. You don't want to lose your team. But here's the trap, okay? Those taxes you're holding back, they're called trust fund taxes. That means the IRS sees it as money you collect on behalf of your employees. When you don't send it in, they consider it theft because in reality, it's their money. It was never the business owner's money. It was the employee's money that you withheld on behalf of the IRS. And they take that a lot more seriously than just about anything else. So what can they actually do? Let's talk about the consequences, because this is where most people underestimate the IRS. If you fall behind on payroll taxes, here are 3 things that can happen pretty quickly. Bank levies. The IRS can freeze your accounts and drain them overnight. You wake up and the money that you thought you were going to use for payroll is gone. 2, vendor contact. And this gets a lot of people. A lot of people don't realize they can do this. They can actually reach out to your clients and vendors and redirect payments straight to them instead of you. And how that looks is your clients and vendors will get a letter from the IRS saying, any payments that you're going to make to this person, you now have to make to us until we give you further notice. Imagine explaining that to your biggest customer. And usually you don't have to, because they just drop you, because most people understandably don't want to deal with the IRS, and that includes sending them payments on your behalf. And then the third thing that can happen: personal liability. A lot of times in businesses, you have the blessing of the corporate shield. You don't have to worry about things affecting you personally. Whenever it comes to trust fund, that's not true. Unlike other debts, payroll taxes can pierce that corporate veil. That means the IRS can hold you personally responsible, even if you have an LLC or a corporation. Now, in addition to the business owner, the IRS can also hold anybody that was responsible for remitting those taxes. We're talking CFOs, controllers, bookkeepers, even outside accounting firms. So that can get a lot of people in trouble real quick. And here's the thing with all these things: it doesn't take months or years. Sometimes it just takes one letter. They jump on this stuff really fast. So if you're listening right now and you're behind or worried you're getting close, what can you do? First off, don't ignore it. Every day adds interest and penalties. Second, I highly recommend getting a professional involved early. And I'm not just saying that because it's what I do. I'm saying it because once the IRS assigns a revenue officer to your case, they're trying to collect as much money as possible, as quickly as possible. That's their job. Having somebody that knows the rules and can step in early can save you thousands, tens of thousands of dollars. Third, know your options. The IRS absolutely allows for resolution of this kind of stuff. That might mean an installment agreement. It might mean penalty abatement. It might even be negotiating a settlement in some cases. But the path you take depends on your exact situation: your transcripts, your filings, your financials. So that's why what we do with every client is called a transcript investigation. We pull your IRS records, figure out exactly what's on the table, and build a strategy before the IRS backs you into a corner. So here's the takeaway from all this: payroll taxes aren't just another bill. They're the one liability that can take down even the most successful business overnight. But if you catch the problem early, there are legal, proven ways to protect yourself. If you want help, or if you're just curious about what the IRS already has on file for you, you can reach out to me directly. We'll run that transcript investigation, and you'll have a clear game plan in less than a week in most cases. So thanks for listening. I'm David J. Griggs, CPA. This has been another episode of the IRS Problem Solver. Stay sharp, protect your business, and I'll see you next time.